Internal Revenue Service IRS tax news. IRS employment compensation is taxable. Have tax withheld now and avoid a tax time surprise. IR 2020-185, August 18, 2020, Washington. With millions of Americans now receiving taxable unemployment compensation, many of them for the first time, the Internal Revenue Service today reminded people receiving unemployment compensation that they can have tax withheld from their benefits now to help avoid owing taxes on this income when they file their federal income tax return next year. So in other words, there's a lot more people getting unemployment benefits due to the current crisis. And when you get the unemployment insurance, the question, of course, is it going to be taxable or not? It generally will be taxable, and you will generally receive documentation to show you how much you have received, a type of 1099 from the government, and therefore will have to add it to your income and end up paying taxes on it. Therefore, if you want to avoid taxes at the end and any interest and penalties related to them, you may want to have withholdings being taken out of your unemployment in a similar way as you would if you are a W-2 employee. So if you're a W-2 employee, in other words, the employer is required to take money out of your W-2 based on the information you provide to them with a W-4. Now, the unemployment, you have to basically tell them. You got to maybe be a little bit more proactive than you would if you are at a place of employment. A place of employment, they're going to require you to fill out a W-4, and therefore, you may fill it out wrong and not have the right withholdings, but they'll require you to do so. You may need to be a little bit more proactive if you think that you're going to owe taxes on the unemployment, and make sure that you take the steps necessary for them to withhold information on the payments, so that you don't have to owe taxes at the end of the year due to the fact that the unemployment is taxable compensation. Back to the text. By law, unemployment compensation is taxable and must be reported on a 2020 federal income tax return. Taxable benefits include any of the special unemployment compensation authorized under the Coronavirus Aid, Relief, and Economic Securities CARES Act enacted this spring. Withholding is voluntary. Federal law allows any recipient to choose to have a flat 10% withheld from their benefits to cover part or all of their tax liabilities. So notice it's voluntary, meaning you have to tell them to do the withholding on the unemployment. So to do that, fill out form W4V, Voluntary Withholding Request. There's a PDF link to that here, and give it to the agency paying the benefits. Don't send it to the IRS. If the payer has its own withholding request form, use it instead. So you want to make sure you're going to the right place. So you got the form here. Make sure you're looking at the instructions for the form as to where to provide the form or who to provide it to. If you go directly to the people that are paying the benefits, then you may want to go there first. They may have their own kind of form, which is basically most likely going to be the same information, possibly in a different format. But if that's easier for them to do and easier for you to do, ask whoever is providing you with the benefits what the easiest way is to get the withholdings set up. If a recipient doesn't choose withholding, or if withholding is not enough, they can make quarterly estimated payments instead. So quarterly estimated payments are typically what you have to do when you're a sole proprietorship, meaning if you don't have W-2 employees, if you're not an employee, but rather have your own business, then there's no one there to make the withholdings from your wages, and the IRS still wants their money as you earn it, not at the end of the year. So they want their 2020 money in 2020, not 2021 when you file the tax return. Therefore, you have to actually pay them quarterly tax payments. So if you can't get the withholdings on the unemployment compensation, and those unemployment compensations will likely be enough taxable income to cause you to pay taxes, then you may just want to make the estimated payments as well. So you can make the estimated payments. And also note, obviously, the unemployment could be one component of income within a family. So there might be multiple people in the family. You have some unemployment income and other wages taking place as well. So you have to think about the full picture as to whether or not that unemployment is going to cause enough taxable income that you will be owing taxes, and whether or not you need to have more withholdings. You can also use their tax estimator tool on the IRS website to kind of do those projections out into the future. Many people probably have very different tax years this year than in prior years. So that tax projection tool to see what your withholdings should be or how much you need to pay could be useful. So the payment for the first 2 quarters in 2020 was due on July 15th. Third and fourth quarter payments are due on September 15th, 2020 and January 15th, 2021, respectively. Also, just note that if you have a choice between withholdings and making the quarterly tax payments, if you make the quarterly tax payments late, they gave an extension for the first 2 quarters, but they typically want their payments throughout the year. So if you make your tax payments late, you still might have interest and penalties that will be on it due to the late payment of it. Whereas if you can get a withholding out of the unemployment compensation that you are receiving or from your employer, if you have W-2 wages, then you may, even if you up the withholdings at the end of the year, meaning you're paying more in the end of the year than the beginning of the year, you may not have that problem in terms of late payments, because the withholdings are usually assumed to be throughout the entire year. So if you have the option for the withholdings and you need to do catch-up payments, and you can do so with withholdings, it might be better to do that. But either way, you'd save interest and penalties to make the payments in one form or the other if you're going to owe money. So for more information, including some helpful worksheets, see Form 1040-ES. There's a link to that here in Publication 505, available on the IRS.gov website. Here are some types of payments taxpayers should check their withholdings on. Benefits paid by state or District of Columbia from the Federal Unemployment Trust Fund, railroad unemployment compensation benefits, disability benefits paid as a substitute for unemployment compensation, trade readjusted allowances under the Trade Act of 1974, unemployment assistance under the Disaster Relief and Emergency Assistance Act of 1974, and unemployment assistance under the Airline Deregulation Act of 1978 program. Recipients who return to work before the end of the year and can use the IRS tax withholding estimator, there's a link to that here, to make sure they are having enough tax taken out of their pay. So you may want, like I said, there's going to be differences in what people are doing most likely this year from prior years, and therefore if you're just basing your tax withholdings on the prior year, it might not be enough, right? So you might want to then use this tax withholding estimator, which is basically a projection tool that can help you to determine if you need to have more withholdings in the current year. You're probably going to need it this year, and then next year at the beginning in January to see what your proper withholdings would be for the entire year. In other words, you might want to do it now to see if you can do catch-up withholdings if you need to, and then do it again in January so that you can see what the proper withholdings would be, hopefully when things settle down and you have standard withholdings for the entire year. Back to the text, available on IRS.gov. This online tool can help any worker or pension recipient avoid a lessen their year-end tax bill or estimate the refund they want. In January 2021, unemployment benefits recipients should receive a Form 1099-G, certain government payments. So you should get if you have unemployment, they should give you a 1099-G. So it's not like you got to save up the checks and go, okay, I got to add up. They're going to give you a 1099. So you should get the tax document on it that will tell you how much you have. And so it'll be easy to fill out the tax return. It won't be easy to make the payments when they should have been made during the year. So the withholdings are the thing that you gotta worry about. So from the agency paying the benefits, the form will show the amount of unemployment compensation they received during 2020 in Box 1 and any federal income tax withheld in Box 4. So any federal income tax you'll have in there, kind of like a W-2, where they have your earnings you're going to have to report, and then the taxes that you withheld on those earnings as well. Taxpayers report this information along with the W-2 income on their 2040 federal tax return. For more information on unemployment, see unemployment benefits in Publication 525. There's a link to that here. There'll be a link to this in the description.